This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi, this is Mathis Connor with Connor Management Group, and this week we're going to look at the best growth stock to buy right now. Today is Tuesday, November 19th, 2014, and here on the opening slide we see that this stock is in the air services industry. We think this is a pretty interesting company, probably easily overlooked. It's not widely traded, and we see its 6-month upside potential at 39.9%. On to the second slide, we see that the name of this company is called Bristow Group Incorporated. Their ticker symbol is BRS. Their industry that they operate within is air services, and we see their 6-month upside potential at 39.9%. On to the quick facts slide. Here's the business summary description for Bristow. Bristow Group Incorporated provides helicopter services to the offshore industry in Europe, West Africa, North America, Australia, and internationally. Its helicopters are used principally to target personnel between onshore bases and offshore production platforms, drilling rigs, and other installations, as well as to transport time-sensitive equipment to these offshore locations. The company also offers helicopter flight training services to commercial pilots and flight instructors, as well as military training services through its Bristow Academy. In addition, it provides helicopter repair and production services and search and rescue services to oil and gas companies. The company provides its helicopter services to integrated, national, and independent oil and gas companies. As of March 31st, 2014, it operated a fleet of 494 aircraft. The company was formerly known as Offshore Logistics Incorporated and changed its name to Bristow Group in February 2006. So, this sounds like a pretty interesting company to me, and, it definitely was surprising to find out about their prospects. Their website is www.bristowgroup.com. That's BRISTOW group.com. The company is headquartered in Houston, Texas. They were founded in 1955. They have 4,486 employees. Once again, the ticker symbol is BRS. They operate in the services sector, and they operate in the air services industry. Bristow's annual revenue over the last 12 months was $1.7 billion. The net income was $119 million, and their cash from operations was $201 million. Additionally, their market cap now stands at $2.5 billion. So Bristow just kind of misses that small cap cutoff criteria of $2 billion and less. So they're just a little bit bigger than a small cap company, and we think they have some interesting business opportunities ahead of them. On to the products and services slide. We have photos of the different kind of aircraft Bristow owns and operates. They're all different types of helicopters. They have what's called their large capacity helicopters that carry 16 to 25 passengers. They're medium capacity helicopters that carry 12 to 15 people. The small capacity helicopters 4 to 7, and the training capacity helicopters at 2 to 6, carrying 2 to 6 passengers. So those are their 4 different kinds of aircraft that they carry. Additionally, on this products and services slide, we have some excerpts from their very recent investor presentation. was given less than a week ago, and some interesting points from that presentation. Here's one quote. It says, declines in recent oil prices have not impacted our production and infrastructure-oriented business model. Now, the interesting thing about Bristow, as shown in one of these graphs, is that 60% of their revenue comes from ongoing production operations. So their exploration activities are tied to only 20% of their revenues. So it's kind of, I find it at least comforting to know that they have primarily a business that's driven on existing infrastructure and not the very cyclical exploration activities of these oil and gas companies, as well as their development activities. Additionally, their contracts, let's see, there's a quote here about their contracts. Well, as mentioned, the largest share of their revenues, greater than 60%, relates to oil and gas production, providing stability and growth opportunities. Another interesting part from this investor presentation was that over two-thirds, a little more than two-thirds of their revenue and operating income come from fixed monthly contracts. So essentially, they sell their services on a capacity basis. So a lot of these oil companies will just pay them a flat monthly capacity service payment just to have them their services available. Well, the remainder of that, close to a little less than a third of their revenue income is related to variable services that are kind of more on-demand type. Additionally, on this products and services slide, there's a graph showing what they call their qualified aircraft opportunities worldwide. Basically, the slide, it says opportunity tracker next 3 years, and they break it down into the demand for their medium-sized aircraft and their large-sized helicopters and aircraft. The greatest demand for the medium-sized aircraft over the next years is seen to be North America, followed by Africa, the Gulf on the west side of Africa, followed by followed by South America. Additionally, the greatest demand for the larger aircraft is kind of a toss-up between North America, Australia, and Southeast Asia, as well as South America as well. So Bristow has healthy demand for the services worldwide. Going on to the metric slides for Bristow. As mentioned earlier, the annual revenue over the last 12 months for Bristow was $1.7 billion. The net income was $119 million, and their cash from operations was $201 million. The operating margins for Bristow were 20.0% in 2013, and they're tracking to be 22% in 2014. And that growth in operating margins is supposedly due to the greater demand for their larger helicopters. Onto the valuation metrics. The trailing PE ratio for Bristow right now stands at 20.0, and the forward PE ratio stands at 13.4, implying a lot of stock analysts expect their earnings to grow significantly. That's a significant percentage change from trailing PE ratio to forward PE ratio of 20 to 13. The PEG ratio is at 1.0. That's what you'd like to see in value opportunities. The price to sales ratio is at 1.5, not high at all, as well as the price to book ratio is at 1.4, also not a high number. The enterprise value to EBITDA ratio stands at 10.3. The recent closing price for Bristow was $70.51. The 52-week low for the stock was $64.10, and the 52-week high was $82.15. So, the stock is a little closer to its low than its high, but not by much. The 20-day moving average for Bristow is $71.47, The 50-day moving average is $69.78, and the 200-day moving average is $73.44. That relationship doesn't necessarily tell you too much, but we'll be looking at the price chart shortly. The average daily trading volume for Bristow stands at 350,000 shares per day. So this is not a heavily traded stock. Actually, the stock is barely misses our minimum criteria for liquidity. We always look at stocks with a daily trading volume of 300,000 or more. But the nice thing is that you can find some great opportunities when a stock isn't widely followed or widely traded, and this is the case we believe for Bristow. The beta for the stock stands at 1.6, so the stock is a bit more volatile than the market in general. It tends to go up a little more when the market goes up and down a little more when the market goes down. And additionally, the stock pays a very respectable dividend yield. Bristow's dividend yield is at 1.8%, and the average dividend payout ratio over the last 3 years has been 21.3%. Onto the price chart for Bristow. What we see is that over the past year, the stock is down 13.96%. Basically, the stock is down 14% over the past year. The stock started out at its high, a little over 80 a year ago. It dropped fast and briefly a bit, and then recovered to the mid-70s, and it held there until, say, July of this year, and then it started to pull back from that that high $70 level to the low $70 level where it is today. And from what we can tell, the pullback is just a result of decline in oil prices and people believing that Bristow will suffer because of the decline in oil prices, which makes some sense. But the earnings have been growing strong, which is the driver for our thesis and outlook on Bristow. On to the summary slide. The financial statement quality of Bristow is very good. The debt they have due over the next 5 years is $150 million. And case in point, the net income for Bristow in 2013 was $160 million. So financially, they're on solid footings. And the operating margin trend, as we mentioned, it's improving. It's improved from 20 to 22%. And the price pattern trend we've mentioned it's been declining. The stock is down 14% from a year ago, but the expectation of increases in earnings and its strong financial position is why we're also optimistic about Bristow. The overall market outlook we see is neutral. We don't see an overabundance of overvalued names or undervalued names at this moment, so we don't see Bristow facing any headwinds or getting any support, any bullish support wins either. The recent closing price for Bristow was $70.51, and our 6-month price target for Bristow is $98.67. So that gives the company a 6-month potential upside of 39.9%. So in our opinion, Bristow has a lot of good things going for it. The stock has declined 14% over this past year, but at the same time, its earnings have grown. So we think there's kind of been an overreaction to the pullback in stock prices for Bristow. That's for sure. They're getting greater demand for their larger helicopters and that's a larger margin product and service for them. And additionally, they're starting to get additional market share in different international markets. So we're pretty optimistic about Bristow, And for this reason, we believe that Bristow is the best growth stock to buy right now. We hope you've enjoyed this presentation, and we'll talk to you soon. Take care. Hi, this is Matthew Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to say, yeah, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things would be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares kind of management groups side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.